Yeah, let's talk about Amazon. I mean, let me just preamble on one thing before I kind of go specifically into Amazon, because you said, tech is in turmoil. And here's the weirdest thing, Pat. For the last 16 months or so, since basically November, was that 14 months ago of 2021, the tech markets have been falling precipitously.
Yeah.
And yet earnings over the next first few quarters into 2022 were actually really good. Now, what happened effectively, and in my thesis on this, is that the markets actually were waiting for things to break. They knew that the inflation was too high. They knew that growth had happened too fast, and they knew that this pullback in labor and everything was going to happen. So I'm going to give you a silver linings, because a lot of these earnings we're going to talk about today are going to be pretty bad. But the silver linings, in my opinion, is the Fed. You saw this week they slowed down the rate hike increases, which has been really what's been putting all the pressure on growth assets and tech companies. But when they start to see the break, when all these layoffs are happening, when you see earnings are getting hit, when you see inflation numbers going down, this is actually going to become a buying signal. And again, we're not giving investment advice, but if you actually look at tech, a lot of double-digit gains in tech, even though some of them fell a little after this week's results, but they were going up. And as companies were announcing layoffs, things were going up. And as companies were announcing weaker than expected sales, their stocks were going up.
Well, I know actually the NASDAQ, over the past month is up 17%. So,
right. And all I'm saying is, yet we all knew it was shit. I mean, we knew that it was actually going to be bad, and yet the markets are going up. And like last year at the same time, when things were really good, you and I were like, what's going on? Good earnings, and the stocks are falling. So Amazon basically came out with better than expected revenue numbers. And in my take, that kind of has to do with a couple of things. When I'm only going to talk about commerce a little bit, and then I want to talk more about AWS, because I think that's really where we tend to have a lot of focus, Pat. But the revenue beat somewhat significantly. Now remember, this company did $150 billion in revenue in one quarter. Pretty good number. But its growth slowed down. I think it's one of its slowest growth quarters ever, if not slowest ever. In high single digits, which they also posted a lower earnings number. But let's be candid with the Rivian factors and stuff. It is extremely hard to discern how Amazon reports EPS. So I'm going to stay away from that part. But the revenue numbers were really interesting because they were up, and they were actually better than everyone expected. But the guide was down, and they guided to like a mid-single digit growth next quarter, which is unprecedented for Amazon.
Are you talking Amazon or AWS?
I'm talking Amazon right now. We'll get to AWS because they were a little better than that. But the Amazon was, they're guiding towards about a 4 to 8% growth, which is just like unheard of for this company. That's their overall number. Mm-hmm. Now, the interesting thing is you're still talking about them doing something like $125 billion in the next quarter. So, the demand for their e-commerce and their products and their services is still really substantial, but we do have slowing demand. Now, we got to look at the external macro factors here. Is household balance sheets have been in incredibly good shape all the way through this pandemic. All the free money that went out, people were propped up, the strong labor market, and then the asset bubble. People had more access to capital than ever before. So what's happening now is you're starting to see, with interest rates rise, with inflation numbers high, home balance sheets got weaker. When home balance sheets get weaker, people spend less on non-commodity items, on discretionary. So that's going to obviously hit Amazon and its core e-commerce business. A couple other areas, though, that were good for Amazon was their advertising business, which is really interesting. I know Google's under a lot of pressure with their ad business right now, regulatory, and of course what Microsoft is doing. We'll talk more about that later. But they grew almost 20% on advertising, and with Google's numbers on advertising itself being single-digit growth this quarter, that means Amazon's actually gaining share in advertising, which has a lot to do with targeting the commerce and the buyer rather than through a more traditional search modality. So that number looked really good. The only other number that I want to bring up, and I'm going to kind of just touch on it and hand it to you so you have something here to talk about, Pat, is the AWS number. Google and Azure were both in that low 30% range, and Amazon's AWS came in at 20. And so I had a lot of inquiries from the press and the media. And I just think it's really important to basically say the size of the AWS business and the law of large numbers. If you look at the actual revenue growth when you're growing at 20% on their business, there's $21.4 billion business right now on a quarterly that's tracking to almost $85 billion is immense. as we have seen enterprises pull back, slowed spending, looking for, I've talked a lot about deflationary tech, maximizing their current investments, meaning some workloads maybe not going to the cloud as fast as they are. That's going to put some pressure on AWS, but the size of that business is immense. And growing 20% in what's considered to be a horrible economy is still pretty good. They're going to have their work to do as they try to, take that to $100 billion annual business. But I think it's being a little overblown. And 20% growth in a business of this size with that level of profitability is still a pretty great result.
Yeah, and just to put stuff in perspective, so overall, I mean, they missed on the guide by 1.6% on revenue. Where they got clobbered was on profit, right? They guided to almost a 45% lower operating margin. I think that's where a lot of this reaction is coming from. And I got a lot of inquiry as well on that AWS number. And it was interesting. I talked on the call, and Andy Jassy kind of dissed the competitors, which he said, we're the only one who actually has a true cloud number. Now, there's a certain element of truth to that, but there's also a certain element of, I don't know what. I mean, AWS number includes SaaS as well. AWS number has SaaS included in IaaS. I don't see the definition of cloud as just IaaS. Let's just call it that. But what is true is that Amazon's percentage of cloud is very heavily tilted to IaaS, where Google is a combination of IaaS plus Google Workspace. And then even Microsoft and their numbers, the Azure number is not straight Azure. It's also includes services to its own PaaS services like Dynamics 365. So totally get that. But with that said, it makes sense for me that the others would be about 10% clip higher on growth, and Amazon is not at that 20%. I guess what I'm expecting as well as we get into the Dells, the HPEs, and the Ciscos, I would expect them to decline because those are the closest competitors with IaaS, which is on-prem. It is interesting. Andy also, like I know the guy I don't, but Andy made the comment about how customers, he can totally see how they would be pulling back a little bit. Amazon internally is pulling back as well. Like maybe they wouldn't crunch numbers as long, right? That was an example that he used. But I think the best thing that he did on the call was talk about innovation and how he has these big bets that some come through, some don't, which I thought was very, very solid and very, very true. There's nothing wrong with Amazon. It is entirely based on the economy. I think they would be doing better if they sold a higher percentage of, let's say, food, because people are not going to stop buying food, right? Grocery stores are not, declining. People have to eat. They're not going to make their own food, and they're not going to starve. So this is just showing the tilting and the mix to more hard goods, things like that.